Hello, it's Matt Williamson, and we are starting off our What is the Stock Market Anyway session with the what's of the market. Namely, what is a market? What makes a market? All right, so we're going to talk about a few things. The first of those being the basics of a market. A market is where buyers and sellers come to exchange goods or assets. Okay, which seems pretty straightforward, but if you think about a market, really there's a lot to unpack here. Markets have been around for really about as long as human beings have been around. At some point, someone was out hunting deers and collecting berries and things, and the person that was collecting the berries realized that they wanted some deer, and the person that had the deer realized, you know what, I should probably eat some fruit instead of all this meat. So they decided at some point to come together and swap berries for meat. Okay, this is essentially the beginning of a market. All right, if you had two people swapping berries and meat, and two meat people swapping beets and meats and berries and wheats and all those kinds of things. You've got yourself a market. Okay, people exchanging, in that case, goods or food, in that case, or assets. So that could also be someone coming in and offering to cook the meat. Right? If you offer to cook the meat in exchange for some berries, now you're exchanging goods, services, which is not on the list here, or assets. So any place where two people or three people or more come together to exchange things, buy goods, sell goods, or assets or services, that would be known as a market. Okay, when we have a market, it operates on supply and demand. Now, when I was in college, my professor used pizza pies and robot arms. That was the only thing people traded was pizza pies and robot arms. So I'll try to keep this slightly more interesting, but the essential idea behind supply and demand is the more people want something, the more it's worth. So if there's a lot of demand for something, it's worth quite a bit. For some reason down here in the South, I'm in Birmingham, Alabama as I record this. For whatever reason, the demand for milk, bread, and eggs goes through the roof anytime there is just a hint of talk of snow. And I don't know what these people are doing with their milk and bread. I don't know if they're making milk sandwiches, but demand goes through the roof, and basically the price could go up. Now, in our situation, because we have regulatory practices in place, the grocers can't gouge you too much on bread and milk, but the demand certainly goes up, and all the bread, milk, and eggs disappear because there is more demand than there is supply. If there is an excess of supply, then the price will go down. If all of a sudden there are 8 million barrels of milk, that's right, barrels of milk, if there are 8 billion barrels of milk, and they're all going to go bad in 2 weeks anyway, then we have a lot of milk. We have an excess of supply, and the only way the distributors or producers are going to be able to get rid of that milk is to drop the price to pennies on the dollar. And then people like me will come in and say, you know what? I'll take a barrel of milk. I could eat that much cereal this week. I'll take the whole barrel of milk and I'll pay you 40 cents for it, 20 cents for it, 10 cents for it. So if you have an excess of supply, price goes down. If you have an excess of demand, price goes up. Going back to our meat and berries metaphor early, if there was tons and tons of berries, then the berries really wouldn't be all that valuable. If there were no meat whatsoever, if the pickings were slim out on the fields of the prairies or wherever we're hunting our meat here, if the pickings are slim, then the price of meat would go up. Now, most of these earlier civilizations were pretty kind, and they would just sort of swap things and be nice to one another. But in today's day and age, if there were a surplus of berries, then in theory, the price of berries would go down, and if there were a surplus of meat, then the price of meat would go down, and vice versa. We've touched on the physical markets. Those would be, actually where you would go into a place and trade, buy, sell goods. Back in the 80s, we had malls, we had shopping malls. That was a physical marketplace of sorts. And now almost everything is done virtually. This would have been like magic, really like 100 or 2 year or 100 couple 100 years ago. This would be, complete scientific fairy tale land where we could go into a virtual environment, and the market is there for us. We could buy a pair of pants and have it sent to us. That was unheard of, not too long ago, really. So now we have virtual markets. Everything kind of kicked off with physical markets, but now almost everything has moved virtual at this point. All right. So this section we talked about what markets are, what they aren't. In our next section, we will discuss stock markets more specifically, rather than just the generic overview of what a market is. So stay tuned, and thanks for watching. This is Matt Williamson for Sigmonomics. We'll see you soon.